Hey, what's going on? So here is a breakdown of today's trade. So I'm going to show you a little bit about my strategy while we're at it and just make this a full breakdown. So I've been trading for about 150 years now, and I've just recently become profitable thanks to my mentor, the grinder, to whom I now owe 15% of all my gains. Check out his channel. So this strategy is called the stinky pinky toe mean reversion fade. Okay, fucking trademark that shit, right? So what we do is we fade the extremes. So let's take a look at the overall market. And yeah, I trade the ES, suck a dick. I'm sorry that I'm not trading the Bitcoin. I stack Bitcoin. I don't trade it. So here we reach all-time highs in the ES, and then we just take a dump for the next couple days, right? And we come into Monday. I take a few hits. Like, I was not happy. We took a few hits, and after that, I knew that the market was uh, going to a downtrend, and I decided to get out of its way and just take my beating like a man. So coming into Tuesday, I sat on my hands because even here we were under the GEX flip, and I'm not experienced enough to trade when the GEX is in the negative. Tuesday, like I said, sat on my hands. Now today, Wednesday, we were above the GEX flip. We were positive in the gamma, and so I decided to partake in today's trade. Now I got up late because I didn't want to get up and see that we were still negative, and I just didn't want to deal with it today. But I took a peek on the screen and noticed that we were rejecting. Not only did we fade the value area low, but we came back and retested the daily value area high, and we were rejecting the daily value area high. So let's do a little bit of fib retracement because I know that there are people here that just love their fibs. All right, so I'm going to lock that in. So if we see a bounce off the 333 here, these are proprietary levels. You cannot copy them. Okay, if you want to copy these settings, you have to ask the grinder's permission. Okay, I didn't make the rules up. These are the rules. All right. So let's actually make this the values appear to the right, so we can maybe see them better. Yeah. All right. So if it bounces off the 333, then we're seeing a continuation in the current trend, as you can see right here. So we faded hard, right? We faded the extreme hard. And you want to see that if you're looking to fade the current extreme, which in this case is selling, or it'll be a seller's market here in a little bit. But I didn't do that, all right? That's not my strategy. So we waited for the 666 here. And then we saw that we busted below the 777. If we had closed below the 888, our trade might have been invalidated, but we held above the 777 and the 666, right? And on top of that, if we go to the 15-minute chart here, we have this big ass fair value gap. Now, I based this trade off of the 5-minute fair value gap. All right. Now, what makes it important? What makes the fair value gap important in any regard, shape, or form is the fact that we formed it on top of the value area. All right. If we had formed it on the value area low, that would have been my target. But we formed it on the value area high. We fade the extremes, right? So we came in. Let's break this down to the 1 minute here. So as you can see, I took a peek at the chart, saw that we were rejecting the daily value area high pretty hard. I got up, went over to the charts, didn't even realize it was before 10 o'clock New York time. Got into the trade immediately with the, how do you say, with the draw liquidity being the high of the day, which was right up in here. And so my target or my take profit was 10 points. My stop loss was 5 points. We damn near immediately hit within a couple minutes the take profit, and I hit lock out my account for the day, and now I'm in the green. And that's all thanks to the Stinky Pinky Reversion Fade strategy. And that is trademarked. You cannot use that unless the grinder says so. All right, let's take a look at a few more things about what I would have done had I been in the market and actually looking at what I'm trading here. So from the swing low to the swing high, we draw out a what do you call a fixed volume range profile. Okay, this is what I trade off of. That's my thing. As you can see right here, I have the daily value area high and daily value area low from yesterday. This is how I draw it out. So for that, I draw out the entire day. But for the swing low and the swing high, because we take out the previous lows here, okay? And of course, we absolutely take out the previous highs here. So that's the swing low and the swing high. As you can see, the price dipped into below the value area, all right? And that's kind of what we want to see. We want to see the price dip below the value area low. And then we want to see buyers come back above and go into the value area before we trade again. As you can see, we did that. I got in. I took my profit, right? And so we come back down. We test the value area high again, and let's do some more measurement here, okay? Because you guys like the fibs, right? So let's take a look at the fibs again. Let's get rid of all this, okay? And let's do a fib extension, all right? Trend-based fib extension. So go from the swing low to the swing high. Then we go back to the next swing low, all right? And as you can see here, we have a projection about what our target after hitting the daily value area high once again should be, all right? So we come in, we test the daily value area high again. We don't know what our take profit should be. Well, guess what? The fib extension tells us. Let's mark this real quick. Bada bing, bada boom. Guess what? We do it. We go up, we test it, and we immediately reject off it. Stupid lines for the motherfucking win. Zap this shit. Let's go.